The content on this channel and in this video are for entertainment purposes only and are not to be construed as financial advice. I am not a financial advisor. Always consult a licensed investment or financial advisor before making any investment decision. Okay, welcome back to the concrete jungle, everybody, here from deep inside the jungle. It's been a while since we've done one of these market update videos, probably far too long, but I've definitely remained active in these markets. And of late, I think things have started to get a little more interesting. Some of the narratives, mainstream narratives, sort of starting to be questioned, and perhaps a bit of an inflection point in the macro landscape and equities, bonds, metals, currencies, and of course cryptocurrencies. And so, of course, when things get confusing like this, technical analysis is really our lens to focus, through the noise, cut through to the signal as best we can, if anything, for our own, for our survival, in these shark-infested, waters that are the financial markets. So, without further ado, let's get right into the charts. First chart, I like to start my review of the charts with sort of the bottom-up approach. So starting first with currencies being sort of the sort of the base layer, and sort of the largest amount of capital, being the currencies. And so the U.S. dollar chart, starting with the monthly charts on all of these, as we do our sort of market survey. And I thought this was a pretty cool chart because it features a number of different patterns. Before we even get into the patterns, though, we look sort of at, okay, well, what is the primary trend? Sort of Dow theory. Is the trend up, down, or sideways? And what can make the argument for sort of a lower low, and then a lower low here. And in terms of the highs, we had this sort of peak here, this sort of V top in 1985, and then followed by this kind of interesting, I think, a head and shoulders reversal pattern with sort of a double topped head, and then you have your left shoulder and your right shoulder. So, and here, followed by a peak here in 2001, which itself I think was probably a kind of a smaller head and shoulders, but still one nonetheless. Followed by a resumption of the downtrend up until about 2008. Since which time we've been in sort of a bit of a channel here. So right now we're sort of range bound between these channel bounds, and we're sort of smack dab in the middle of this now. I could see it very well going either way from here. We have moving average support, the 50-period moving average. We're sort of smack dab in the middle of the Bollinger Bands, with the upper and bottom Bollinger Bands sort of approximated by the bounds of the channel. And so, I think that this is helpful insofar as, you hear the mainstream narrative of the dollar is dead and there's de-dollarization and central banks are buying gold and the BRICS nations, etc. But to me, this chart does not herald any imminent collapse to the downside. If anything, there's fairly good support here at the bottom of the channel until, of course, if and when it decides to break down and resume what may be a secular downtrend. So Uh, we have to see, how this behaves on the weekly time frame. Uh, we're looking at 200-week moving average support on sort of the lower range of this channel, so that could be where the dollar finds some support. Um, and so we'll have to see how this develops. As far as the 10-year Treasury note yield, as I've discussed on previous videos, secular, this is the monthly chart, 200-month moving average. Secular downtrend since probably about 1980s. A secular bull market in U.S. government bonds until up about recently, right? So, March 2020, collapse in financial markets, short-lived collapse, followed by a sort of meteoric rise in asset prices. But we know we haven't broken this 200-period moving average until recently in 2022-ish. And as we've sort of discussed before, when we look at major reversal patterns, we sort of look for these stereotypical, in this case, what I think is a reverse or inverse head and shoulders. And we can draw our sort of neckline, if you will, as the line that gives us the most number of touches, because that really is fundamentally what makes a trend line more significant. Is the more sort of what I like to call honest touches. So not just cutting through too many um, midpoints of like, so not kind of like doing this or this or this, you know. Um, and so if we do that, we can see that the target for the 10-year Treasury note yield is still around the 6% range. And so um, the folks that are calling for sort of the uh, return back to 0% interest rates and just wait for the housing crash, it's definitely coming. Uh, I'm not so sure. I'm not so sure. The momentum here, even though we're sort of threatening higher highs on the bond yields, the momentum doesn't seem to be, wanting to follow suit. So that may herald some weakness in the yields or some bullishness in the price. So, but that's just sort of an early warning indicator. And for now, I would look for bond yields to go higher. And certainly on a secular basis, I do believe that this head and shoulders is a major reversal pattern with the breakup of this secular trend line. As far as the short-term bond yields, as we can see, the yield curve still being rather inverted, with the longer-term yield still being quite a bit under the short-term yield. And so similar thing through here, sort of a break above this secular trend line. This being perhaps a head and shoulders, more maybe a rounding bottom type formation. And so again, we're looking at sort of the monthly chart here and a possible target, of around 5.6, 5.7%, which we're getting fairly close to at 5 on the 2-year Treasury note yield. If we look at our indicators in terms of the relative strength index, we are seeing that we made quite a bit of a higher high, and barely a higher high on the momentum. So that's technically it's confirmatory. However, on the weekly time frame, if we sort of zoom in a little bit, we can see this meteoric rise in the yields, just absolutely, really a historic rate of acceleration of the yields. But I think that that if anything, in terms of the short-term yields, we are seeing this bit of a divergence. So to me, this does signal weakness in the yields, and it is sort of an early warning signal that that I'm looking for sort of a pullback in the yields, keeping in mind that we may be in sort of a new regime of increasing yields. But of course, nothing can go up in a straight line. I think this decline in momentum does suggest perhaps a pullback down to support before a resumption higher. In terms of the gold price, a very interesting chart. So we do have this sort of secular bull market in gold really ever since, at least as far back as this chart goes. Of course, gold has been, an asset, a stored value for thousands of years. But when it comes to sort of this purposes of this chart, it looks like since 1997. So we have just this very simple trend line of, 1, 2, 3 touches. And I think we're getting fairly close to an inflection point. Of course, people like to talk about the, the cup and the handle pattern. You'll excuse the drawing skills here, but you sort of get the idea. And if we sort of, project where we think that may go, and you'll hear the sort of the gold bugs, going crazy and telling you to buy, stock up on, precious metals and whatnot. But you're looking at around $3,500 gold, which it seems fairly reasonable. The if just the number of currency units that have been generated in of late, that probably the real value of gold is probably somewhere more like $3,500 US. But gold is a big ship. It takes a long time to turn around. So, but I do think we're getting to an inflection point. It's sort of that do or die moment here for gold, and we're getting awfully close to retest this trend line where I think there would be some decent support at, let's say, the 1850 level. And if we really want to drill down onto the short term, is there a bit of a sort of bullish descending pattern that's in the works here? That may be my bias towards gold, but we'll just have to see. But I do think that on a long macro scale, we are coming to sort of a bit of an inflection point, if you will, sort of X marks the spot. And so the sort of the corollary to gold being the silver market. Have kind of this interesting, construct that I've worked out here in terms of in terms of support and resistance lines. But I do think that in particular this line here, where you have numerous touches, and I think being a fairly valid trend line, shows us this sort of triangle formation, which I think is a very bullish pattern now. But being just like gold, there is the metals take time, and silver being very volatile. But I think that if we turn on our moving averages, this 200-month moving average here, is to me, I think, a bullish signal. Also, the fact that the price didn't sort of quite yet touch the bottom of this range, I think is interesting. If I can find here so I think if anything, this price is being sort of supported by this 200-period moving average, perhaps. But it's still early to call. We're still in this pattern. And I thought it was interesting that we made this sort of on the weekly chart, this sort of lower low on silver. And so we'll just have to see, will the 200-week moving average hold? Or will there be sort of a resumption down to the bottom of this range? So we'll have to see. Now, if gold does hold support at this trend line, silver, one would think would follow. But I think it's, for silver, I think it's definitely a chart to keep an eye on. But of course, there's no surefire bets. As far as the S&P 500, so we have this, what I sort of like to call the sort of up and to the right chart. Um, if anything, perhaps more a reflection of the devaluation of the U.S. dollar rather than any, let's say, inherent increase in value, within this index. Perhaps a lot of it is from re-indexing or reallocations or sort of sector shifts and sector rotations rather than sort of anything else. But certainly you would have done well in terms of at least protecting your purchasing power against holding fiat dollars since 1924. So not saying much there. But we can see that we have numerous trend lines. If we sort of zoom in to the most recent action, we can see that these trend lines here have held up fairly well. Of course, we have this very long trend line going back to, let's say, 2009. But for now, we are holding this sort of intermediate trend line as support. Sort of threatened a breakdown here. But if we sort of zoom in on the weekly chart, it does have the look of something that suggests a bit of a reversal pattern. And if that were to be the case, then one would actually expect a retracement back down to the breakout point, or in this case, perhaps perhaps the trend line here. So we'll have to see how this interacts with these trend lines. Of course, if we sort of break down below this trend line here, I think we'll be having a different discussion. But at least on the short-term time frame, I think those that are calling for sort of this horrendous crash, I'm not so sure. We'll have to see. So moving on to crypto, sort of the asset class that sort of got me hooked into the financial markets and the study of these markets. Go to Bitcoin dominance. So Bitcoin dominance has had been in sort of this range from between, let's say, 2021 and 2023, sort of bouncing between 39 and 49%, and had looked for there to be some resistance to this dominance at the top of this range, but this looks to me a bit more like a bit of a breakout in dominance on the monthly, and so now we're sort of retesting that upper bound as support. So will it hold? Being the question. So I think it'll be interesting to see. The dominance tends to, so if the price of Bitcoin is, the market cap of Bitcoin is going up relative to sort of everything else, the altcoins, if you will, either that could mean that Bitcoin is ripping to the upside and the altcoins are ripping less, or sort of the converse of that being that the entire market is hemorrhaging capital, and there's enormous outflows of capital, but that it's outflowing out of Bitcoin at a less rapid clip than the others. So which one is it? I'll let you be the judge here. But one chart I do like is the Ethereum to BTC chart. So this had held sort of this long-term trend line where Ethereum had been consistently outperforming Bitcoin for some time, 2019 going back, and the sort of the ratio sort of rolled over through that trend line, which I thought was kind of interesting. I'm not so impressed with this pattern, and if anything, this doesn't look so great to me in terms of Ethereum outperformance relative to Bitcoin. If anything, it has the look of sort of this rounded top formation. One could also argue, well, there's this bit of a bullish, bullish descending sort of pennant, or wedge formation, which is also possible, so that it could, reclaim and resolve back to the upside. So I think we have to see sort of what Bitcoin does, of course, in terms of that. And recently we had sort of some dramatic price action to the downside. Just to recap, we've been in this sort of up and to the right style chart. One thing I would note is that the momentum on the log scale is, sort of, we're making higher highs, but the higher highs are sort of less. That's sort of the diminishing returns model that you hear some folks talk about on YouTube and whatnot. To me, it just is that yes, higher highs, but the momentum is slowing down. So that is something we have to keep in mind here as we go into sort of this next phase, if you will, of the markets. But certainly we had sort of a huge rise from sort of that breakout from 10,000 up to 69,000. Elon Musk announced that he bought more at 62 or whatever, or somewhere around that range, or in the between, somewhere between there, leading up to that first top of this sort of double top formation and a breakdown. I think it's worth sort of recapping sort of how we got here, if you will. So, if we sort of take this double top formation as a target projection, we can see that we basically fulfilled it almost spot on here. This is probably better if we use this. But we're about the same result here, which was about 16,000. So was that the bottom of the bear market? I mean, maybe, maybe not, right? But from a technical perspective, it basically followed it like by the book in terms of achieving that target. And then in this case, the minimum target was support, and so we kind of rallied up to 31,000, and I think a lot of people were buying Dogecoin and expecting it to go up, and then the other day, Friday or whatever, it sort of had a 1 day breakdown. So so where do we go from here, right? I mean, right now the price action is stalling out at this sort of 30,000. It has stalled out a bit at this 30,000 level. So, could it be just ranging sideways and preparing to go higher? I mean, it's certainly possible. I thought it was interesting, leading up to that, I think it was last Friday, that sort of big down day. I thought it was interesting that, from a time and price perspective and a pattern perspective, it almost looked like we broke down from this sort of ascending asymmetrical triangle, which is technically it's a bearish pattern. I hadn't seen this until sort of after the fact. So we could either use this or we could use this. This is probably actually a better trend line just because there's more touches here instead of using that. So, but I thought this was really cool. A bit of a breakdown. So, if we do, interpret that as the market saying that it wants to go lower, let's see. So I guess the first, the first touch here and the first touch there. So, as sort of a conservative downside target, let's say somewhere around 17,500. So to resweep those lows. I mean, I really don't know which way it's going to go. All I'm saying is that it's this possibility has presented itself to me, and so it's looking. Things have gotten a little interesting. Let's just put it that way. Yeah, so let's see. If we sort of turn on the moving averages. So we're definitely down on we were sort of in this very low volatility range for a while, sort of this period through here, and we sort of abruptly pierced below. Now we're sort of busting through the bottom Bollinger Band, and now the 8-day exponential moving average sort of threatening to be resistance here. So what I would want to see for at least a retest, at least sort of a retest, let's say back to the bottom of underside of that triangle, so sort of a bearish retest, it would need to get pierce above this 8-period moving average is what I would look for. So there you go. And so Ethereum, kind of an interesting play with moving average here, 15-month moving average, sort of forming this, sort of converging with this sort of classical trend line, and sort of where the price action is here. So I think Ethereum is going to take its cues from Bitcoin, as it always has. But if we sort of get rid of this trend moving average, I think those can bias us. We're seeing that we're sort of rolled over through this trend line through here, and on the weekly chart, we haven't had quite of a dramatic flush to the downside. But are we threatening a lower low here, or is this just a flush below before a recapture of the trend line? I don't know. But are we threatening it? Are we threatening it? We'll have to see. So again, in terms of moving averages on the daily time frame, I'd like to see this 8-period on the 8 EMA on the daily is sort of threatening it as resistance right now. So I'd like to see if this can recapture above before seeing what happens next. So if you made it this far, thank you. Please subscribe to the channel, give it a like, and of course, none of this is financial advice. So this is purely for entertainment and purposes only. But I did hope you found it entertaining. And until next time, from the concrete jungle, take care.